So the crypto ETF was approved and crypto took a massive dump. Not literally, figuratively, but people probably felt like that when it happened. But I'm just going to talk about today why the ETF doesn't actually really mean a lot for crypto in the short term, and essentially what is going to be the real drivers of growth in crypto in the coming months and what you should look out for. But before we get into the video, like and subscribe, it really helps me, and let's get into it. So everyone thought that this ETF was going to be this huge thing. Well, actually, it was just a lot of news around that. Everyone's just kind of looking to prove their biases in terms of their crypto bullish mindset, and obviously all the news that they're going to be seeing is about this ETF. They're going to be saying, oh my god, this ETF's coming, crypto's going to boom, blah blah blah. But that's generally what they want you to think. So I mean, there's always the saying, right? It's like, buy the rumor, sell the news. And I really think this is just a case of that, because we can see Bitcoin having its run up. So this was when the fake news came out about the ETF being approved, when it wasn't, and obviously we saw that dump when people found out it wasn't. And then this is where we see the run up to the approval, and then obviously the sell off. And it's just the same case, really. It's just buy the rumor, sell the news. Obviously there is multiple groups in crypto, right? You've got the one group which are in this for the long term. They see crypto going to the absolute millions of the moons. And then you've obviously got the people who are in it and out of it who don't really care. And this was just another case of that. We can see this in Brexit, right? If you look at the run up to Brexit vote, the price of the pound absolutely skyrocketed. And when they left, it just absolutely plummeted. I mean, it's not really the best example, but it's just generally, again, it was sold on the news. So if we just look at the Bitcoin liquidation map, we can see here that obviously in the run up in November, we can see so many longs here. The longs just start to slowly fall off. So essentially a long is that people will set a price target. So they'll say, I think Bitcoin is going to hit 37K. And if their price is hit, then they will be liquidated. So if there is a large amount of longs and they get liquidated, it's actually going to drive the price down because all of those positions get sold. So obviously we can see a lot of shorts here. All of these shorts get liquidated as the price rises. And then a lot of these longs are liquidated as well. So the number sort of just messes around, I guess. Shorts, again, a lot of them are liquidate up here. But we can start to see some more shorts pick up here. And that number just keeps increasing. People just selling the news. So people are just shorting the news, and that's just generally how it works. And the reason that this ETF didn't really affect the price is because a lot of hedge funds who want to invest in crypto already own the asset for starters. The ETF just allows people to not own the asset directly. They can just indirectly own the underlying asset through the ETF fund. So there's not actually much money in the system that's available right now. With interest rates at 5%, as you probably know, your parents or you, if you're in your own house, you're seeing your mortgage rates absolutely skyrocket because the bank's interest rates are much higher. But what this means is people who own cash can get 5% on their money completely risk-free. And when that is 5%, people don't really feel the need to take risks with their money, or often these are locked up in government bonds. So a government will have a treasury bond of like 2 years, 5 years, 10 years, and those will have their individual rates. The rate would have been higher for a 2-year. So people will have that money locked up for a set period in order to gain a guaranteed percentage at the end. And this is just completely risk-free for them. So when the interest rates are high, generally the markets are not doing that well because people are just holding their money in cash. And no new cash has been liquidated. These funds, these big investment companies, etc., they still have all of their money locked away in cash or in government bonds. The reason that the ETF didn't cause the price to just skyrocket, because people who want to invest in crypto are already invested in crypto, and these are the big whales that you hear about causing the big price swings, the money makers, etc. They are the ones causing the price swings. So until we see a good event happen, i.e. the rates going down, and sentiment driving. So the only reason that the stock market is up for the moment is obviously a lot of people are buying with the cash that they have available. We can't really hit those absolute new highs until a lot of new cash gets unlocked, and it no longer becomes beneficial to hold your money in these 5% funds. When the interest rates drop to say 2 or 3%, people will start unlocking that capital and move it into investments such as Bitcoin or stock market. So essentially, we've got to wait until then. Obviously, the Bitcoin halving event, I don't really think it's going to do a lot because a lot of the Bitcoin has already been unlocked, so that event becomes much more minimal. The real thing that we're looking for is the global liquidity cycle. And we can see here in 2020, there's absolute boom, domestic liquidity, absolutely skyrocketed, pretty much higher than we've seen before, other than just after the financial crisis. So until we start to see a big rise on this, we're not really going to see any real movement, and essentially that is just when capital gets massively unlocked and money printer just goes boom. So until then, we're not really going to see that absolute growth, but the ETF does make it easier. It does make it easier for people to buy. Ultimately, they can just go straight to BlackRock, they can buy this ETF, and it's just much easier for them. And obviously, if BlackRock gets a ton of orders for the ETF, they will then have to buy more of the underlying asset to keep the ETF price stable with the Bitcoin price. So until then, we get that liquidity push, we're not really going to see much of a big move. But in terms of where we are right now, where can we go from here? So we can see that we've sort of tested this level here around 38.9. So ultimately, I don't know where it's going to go from here. I mean, it looks like we've had a bit of a pullback into the upside, but in terms of where we can go lowest, I would expect nothing lower than this 34 to 37, 38 zone, because people are buying a lot more longs as well. We can see the long number rising again. So I don't think crypto is really going to go much lower. And if you have been holding, well done, even though your profile is blood red. If you're at the point where you've lost some money, then you obviously bought near the top thinking that it's going to absolutely skyrocket. In future, just buy the rumor when things just start getting warmed up. Or, I mean, if you're in crypto, this is a good point to start buying. I would say perhaps we're in a buy zone. I wouldn't invest all of your capital at this point. It could potentially go lower. Like I say, I would probably start investing most of my money around this area. But if you had, say, $100, then you could go in around 50 now. We have had a nice pullback and we might start seeing some rate cuts soon. As soon as we start seeing some rate cuts and things start getting really warmed up in the economy again and we start to see some free cash come in, likely a lot of that is going to go into Bitcoin as well. So it's not a bad time to buy it, particularly in Seoul at the moment. And we've also seen that Alameda was offloading $1 billion of the ETF Grayscale. So we can see here, Grayscale has offloaded 2.14 billion in Bitcoin since ETF approval. And this is just the case for anything. Like, people are just offloading a lot of what they have. I mean, Alameda, if you don't know, was the hedge fund of FTX who collapsed it's actually 2022 November now. So time has literally flown. And yeah, so we're just seeing a lot of offloading of assets essentially. So I think that a lot of it has essentially happened. I think if we are going to see a move to the downside, it's going to be of much smaller nature. We can see trading volumes actually a lot more down. We can see trading volumes here were actually a lot higher during the ETF, but we've actually stabilized to normal sort of values at the moment. We can see spikes around here, but trading volume is actually much down at the moment, so we're not going to actually see the same wild swings as before. It's going to be a lot of movements, but potentially we might go down a bit more. So like I say, I would say that this is your sort of buy zone. There is potential room to buy a bit here because we have seen around a 12 to 13% drop. Let's have a look. We have seen an absolute drop to the downside, so we went down around 18%, which, to be fair, is kind of normal in crypto. That's just another day on the job. So the likelihood of seeing a massive more drop down, I don't think massively likely, but I would say sort of this level is where you would definitely want to buy in. I don't think we're going to go any lower than that, but again, I'm not giving financial advice. I don't know much more than most people, so. But I mean, the writing's on the wall, right? So we've had a massive offload of like people's. We had a massive offload. The big group who were trading this ETF, they've all sold off, taken their profit. Grayscale obviously is dumping a lot. Alameda is dumping a lot of Grayscale. So we are seeing this drop, but I think that's sort of thinning out now. And in regards to Sol, obviously Sol's taken the biggest beating, but it has actually seen the biggest rises over the last year. So again, Sol is a big one. We can see a lot of movement out of Ethereum into Sol and using their network. We can see so much being built on there. Even Render, etc., has moved over to the Solana network because it has the capabilities that they're looking for quick transactions as well as low fees. So again, I think Solana is probably getting into a good zone to buy. We can see a pullback, but again, a nice pull up since then. I mean, if we drop down to here, this is certainly a good buy zone. I highly doubt we're going to go any lower than this. Again, what do I know? But yeah, I really just think that if you have held, then just keep holding, because we're only scratching the surface, right? So we're only going to see those big institutional money come more into crypto when that funds gets unlocked, when interest rates drop, when that money gets unlocked and put back into the market. Even same with the stock market, high risk assets in the stock market actually aren't doing that well. We've got the S&P, etc., doing well, but high risk assets like high growth companies, perhaps ones that even aren't that profitable or aren't profitable or are still not doing very well. So we're not at the high risk taking phase yet. We're yet to see that. So just keep holding your crypto. Don't get too sad about this blood red days. Obviously, we've all taken a beating. Maybe you're not going to go out and eat that takeout that you were going to order. You're not going to buy your girlfriend a nice present anymore just because you're broke. But just hold. I think we're going to see a lot bigger gains coming. And yeah, thanks for watching.